You're watching ICCM climb 200% while your portfolio bleeds red. How much has that cost you? Because right now, somewhere, an investor just like you is about to make the decision that will define the next decade of their financial life. Not because of what's happening in the market, because of what's happening in their mind. The Stoics called this Phantasia Kataleptike, the compelling impression that feels like truth but isn't. By the end of this, you'll know exactly why that burning need to chase ICCM and bird isn't opportunity. It's the ancient pattern that has destroyed more wealth than every market crash combined. Let's be specific about what's happening right now. S&P down 1.21%. NASDAQ down 1.34%. Your solid positions, the ones you researched, the ones that made sense 3 weeks ago, they're red. Not catastrophically, just enough to make you question everything. And then you see it. Bird up 39%, ICCM up 200%. In one day, your brain does the math instantly. If you'd put 10,000 in ICCM yesterday, you'd have 30,000 today. But you didn't. You were disciplined. You stuck to your strategy. And discipline just cost you $20,000 you could have had. That math is poison. Because here's what's actually happening in your nervous system right now. Your amygdala, the ancient part of your brain designed to keep you alive on the savannah, is screaming that you're being left behind. The tribe is eating. You're starving. This isn't about money anymore. It's about survival. And when survival instincts take over, the prefrontal cortex, the part that actually thinks, goes offline. You're not making investment decisions. You're a frightened animal trying not to die. The VIX sits at 18.44. Elevated anxiety. But your personal fear index is off the charts. You've checked your portfolio 4 times in the last hour. You've opened the trading app twice. You haven't bought yet. But you're going to. Unless something interrupts this pattern right now. Marcus Wellington watched this exact scenario play out in March of 2000. He was 32, portfolio manager, rising star. He watched a stock called JDSU climb from $15 to $200 in 18 months. Everyone around him was getting rich. His disciplined value positions were flat. Every day he didn't buy JDSU, he lost theoretical millions. The pain became unbearable. He broke, bought at $190. 3 months later, JDSU was at $7. But here's what he tells people now, decades later, silver temples and weathered hands folded on his desk. The money he lost wasn't the real cost. The real cost was what happened to his identity as an investor. He stopped trusting his process. He started chasing. It took him 6 years to recover. Not the money, his mind. Epictetus, the Stoic philosopher who went from slave to sage, understood this 2,000 years before Marcus learned it the expensive way. He said wealth consists not in having great possessions, but in having few wants. But he also said something more specific about moments exactly like this one. It is impossible for a man to learn what he thinks he already knows. Right now, you think you know what's happening. You think ICCM went up 200% because of fundamentals you missed. You think Bird jumped 39% because smart money knows something you don't. You think the opportunity is the stock. That's what you think you know. And that false knowledge is blocking what you actually need to learn. Alex Chen sat across from Marcus last Tuesday. Laptop open, eyes darting between screens. ICCM is still climbing, Alex said. I know the principles. I know about FOMO. But Marcus, what if this time it's real? What if I'm not being emotional? What if I'm just seeing opportunity and discipline is making me miss it? Marcus didn't answer immediately. He let the silence sit. Then he asked one question. Who are you? Alex blinked. What? Who are you? As an investor, when you look in the mirror, after you make this trade, after ICCM drops 80% in 3 days, after you realize you bought the top of a momentum spike with no fundamental support, Who do you see? Because that person, that's who you're about to become. The question hung in the air. Every decision you make doesn't just change your portfolio, Marcus continued. It changes your identity. You're not choosing whether to buy ICCM. You're choosing whether to become the kind of investor who abandons their strategy when they feel pain. And once you become that investor, you'll do it again and again. Because it won't be a decision anymore. It will be who you are. This is the part most investment advice misses entirely. They'll tell you FOMO is bad. They'll show you statistics about chasing returns. They'll give you rules. But rules don't work when your identity is under attack. Because right now, you're not just afraid of missing gains. You're afraid of being the kind of person who misses gains. The kind of person who isn't smart enough, isn't fast enough, isn't enough. And that fear is 1,000 times more powerful than any rule about position sizing or risk management. Epictetus taught his students to distinguish between what's in their control and what isn't. ICCM's price? Not in your control. Bird's momentum? Not in your control. The narrative that says you should have known, should have seen it, should have bought, not in your control. That story is being written by your amygdala, your social conditioning, your primal fear of being left behind. Here's what is in your control. Your response, your identity, your decision about who you're going to be in this moment. The Stoic investor framework for FOMO isn't about suppressing emotion. It's about redirecting focus. When Alex started to spiral, Marcus taught him 3 questions, not rules. Questions. First, does this opportunity fit my existing strategy? Or am I changing my strategy to fit this opportunity? Be honest. If you didn't have a thesis on ICCM yesterday, you don't have one today. You have FOMO dressed up as analysis. Second question, if I make this trade and it goes to 0 tomorrow, will I be able to explain to myself why it was the right decision with the information I had? Not the outcome, the decision. If your answer requires the stock to keep going up to make sense, it's not investment logic. It's hope. Third question, who am I becoming by making this choice? The investor who trusts their process through discomfort, or the investor who abandons ship every time someone else's ship looks shinier? Alex didn't buy ICCM that day, not because Marcus gave him a rule, because Marcus gave him back his identity. 2 days later, ICCM dropped 62%. Alex's portfolio was still red from the broader market decline. But something had changed. He wasn't checking it every hour. He wasn't comparing himself to lottery winners on Twitter. He'd remembered who he was. The market will always produce outliers. ICCM today. Something else tomorrow. There will always be a stock that went up more than yours. Always someone who got richer faster. Always a reason to question your discipline. This isn't a bug in the market. It's a feature. It's the price of admission. The investors who survive aren't the ones who never feel FOMO. They're the ones who feel it and choose their identity anyway. Epictetus again. He is a wise man who does not grieve for the things which he has not, but rejoices for those which he has. Your portfolio is bleeding because the market is down. That's not a crisis. That's a Tuesday. ICCM is up 200% because momentum and speculation created a spike. That's not opportunity you missed. That's a lottery ticket someone else bought. The only question that matters is this. When you look at your decisions 6 months from now, will you see an investor who stayed true to their principles when it was hardest, or someone who broke the moment the pain got real? Marcus keeps a note on his desk. 4 words. Protect the investor within, not the portfolio. The investor, because portfolios recover, identities don't. Not easily. Most investors already know this is happening. Do you?